we come to the best panel, which is entitled Reimagining the Credit Ecosystem with Alternative Data. Why do I know it's the best panel? Because I'm running it. So I'd like to invite up on stage to join me, please, Ammar Ahmed, Deputy Chief Executive Officer of Darryl Sharia, Bryan Carroll, co-founder and former Chief Executive Officer of TNEX Bank, Darryl D'Souza, experienced banker and author, and Sinan Ozcan, Senior Executive Officer and Board Director of DP World Financial Services. Yes, yes. Let's begin by discussing the lending ecosystem in the GCC and obviously with a particular focus on the UAE. Sinan, if I could start with you, how do you see the lending ecosystem evolving in the GCC? Broad brushstrokes.
Thank you very much indeed, and good afternoon, everyone. Well, we are going through quite interesting times, you know, in high inflation, elevated interest rates, war in Ukraine altogether. Actually, it creates a kind of vacuum that the region can capture. And the way I see it, it's connected to the whole agenda of Dubai to double its economy under the D33 agenda. So I can't think of the lending ecosystem disconnected to what's going on in the world and how the region is positioned to it, basically. And as DP World, obviously we are a key part of this growth agenda for the Dubai as well. And us as DP World, we are in a transformation journey altogether. We've been historically a ports and terminals operator, now going into end-to-end logistics to connect the supply chains across the globe, basically. And while doing all this, it's all about looking at our mission, which everything else is tied to, which is enabling smarter trade. So we've been acquiring, investing, improving ports and logistics infrastructure throughout the years simply because the infrastructure is the biggest barrier in front of global trade. What is the other very, very big barrier? It's access to capital, so your trade finance gap. So keeping that in mind, we have set up our DP World Trade Finance and looked at the trade that we handle, because everyone talks about that $1.7 trillion trade finance gap in the world, but no one is able to actually make a difference or move the needle from one place to another. So we looked at the trade that we handle. DP World handles about 12% of the global trade. So we saw that 50% of that comes from the small and medium enterprises, whereas the other 50% comes from the large corporates. The first 50 SMEs have access to about 10% of the funding from the traditional banking ecosystem, whereas the 90% of the funding goes to the large corporates, which is the other half. So it's clear where the gap lies. So we looked at why this is happening, because we can just go and say, like everyone else, okay, let's connect, bridge the gap, and so on, but how it happens is the key. So we looked at the SME side. What is their problem? So they don't have a Harvard graduate CFO. You know, they don't even have time to go out, you know, all the banks, meet them, find the right people, and connect. They are often under, stuffed, overwhelmed, and it's difficult for them to express how the financials have to be interpreted or have to look like in the future. So we created a DP World Trade Finance as a platform first. So it's a single window for an SME or even a large corporate for that matter to join free of charge and be able to apply to multiple lenders with a few clicks. So we've launched this less than 2 years ago, and today connected about 25 financial institutions across the globe and registered 57,000 companies, which already are operating and apply to about close to $800 million loans on the platform. But this is only one part of the issue. The other part is the financiers, obviously. So in the, again, tying to the lending ecosystem, so we have seen more and more alternative lenders, non-bank finance companies, trade finance funds coming into the mix. But they don't have a sales army like a bank does. They can't go to the same street and knock all the doors and see all the companies out there and really find the best ones that they can finance. So we said, okay, a lead engine, an originator in a cost-effective, client acquisition is a key value add for them. So the platform is a lead engine, an originator for those financial institutions. But it's the alternative lenders are still a smaller portion of the lending ecosystem. So we have to be inclusive in a way. We include the larger banks. So then we looked at the problems that those larger banks are facing. So it's all about the risk, right? So we can't say that banks are evil and they just don't finance the SMEs or the trade. It's just a simplistic approach, but there is a reason behind it. Historically, the trade is perceived as riskier, and SMEs has a historical, higher default rate. But we said, you know what? We have access to a massive trade data, both on a live trade and the collected data. And we can also control the cargo. We said, okay, we're going to create the platform in a way that mitigates the risk to an extent. The risk will always exist, high or low, but it's about mitigating the risk and minimizing it, basically. So first, we are a regulated entity by the DFSA, by the Financial Services Authority. So what we do is KYC, ML is top-notch, global standard. So whoever comes to the queue of a bank on the platform is already KYC'd by us, and continuous AML screening and live trade data and so on. So that already helps for them to have a better pool in the first instance. Second is DP World has access to over 90% of the global container shipping in the world, not just DP World ports and terminals. And looking at the trade, which has information asymmetry, lack of transparency, and altogether makes the trade higher risk, right? So we plugged it on our platform. Today, a lender, a bank, when they receive a paper bill of lading, which can be fake, forged, lost, you name it, they can check based on the container number and the BL number that there is an actual cargo. And actually it moves from point A to point B, they can check and trace it. So which increase massive transparency. And I can increase the examples that we tried to capture in creating this ecosystem, and we are inviting more and more lenders and onboarding more and more lenders onto the platform. In just less than 2 years, we have, as I said, 25 lenders. So this is how we see is the ecosystem evolving.
Well, what you're telling me, I think, is it's down to quality of data, access to data, quantification of data, and we'll come back to that point a little later on. I want to ask what is effectively a region-specific question, if I may, to Ammar. The opportunity specifically in Islamic finance. What are we seeing in terms of what Islamic banking offers compared to conventional banking? How can Islamic banks capitalize on the lending opportunities?
Firstly, thank you very much for having me here. So I think being in this region, we all understand very well in comparison or vis-a-vis conventional banking, how Islamic banks function in terms of the intermediation process. So if you see a conventional bank, we have only one mode of intermediation, which is you lend on interest. So when you look at any credit ecosystem from that perspective, probably you're only looking at securities, collaterals, or use of proceeds. When you come to Islamic banking intermediation, anything but lending and borrowing. So I would pick up from the example that we had just now on trade finance. So if you look at any Islamic bank and how they do trade finance, you would notice that Islamic banks in a trade finance ecosystem are basically acting as, I would call them traders. So if you approach an Islamic bank and apply for LC, the bank is an applicant. which technically means that bank is the purchaser of that commodity or of that, the good that is to be imported locally or from an international market. Now the challenge that Islamic banks had in the past was, how do we ensure that, let's say, in trade finance, we know you have refinancing, you have receivable financing, you have all sorts of different aspects to financial or the credit, as you call it. With the emergence of a holistic credit ecosystem, what has happened, and in one of these ecosystems, Islamic banks like Dubai Islamic and others are also participant, is access to data, access to, because we understand credit ecosystem as multiple players getting together on the system. So if you have suppliers, if you have purchasers, if you have banks, and now logistics providers who can certify availability of a commodity, presence of a good, and that will then facilitate, or that has facilitated, an Islamic bank doing intermediation. How? So if a customer were to approach after the goods have arrived and they are lodged at the port of DP World, for example, and they want to approach an Islamic bank for financing, Islamic banks would adopt a structure that is called as murabaha, which means that they purchase at cost and they sell to their customer at profit. Now what that would mean is there should be presence of a commodity. Now with this ecosystem developing and being certified, or multiple players being present, that yes, the commodity is present. Earlier, what used to happen, the bank representative would go to the port, inspect the availability of the goods, and then say, yes, we can proceed with this transaction or not. Now, with the emergence of all the players coming together on the platform, it has definitely helped. So I would say that credit ecosystem and getting all parties on the table together would rather help Islamic banks more. They would definitely help conventional banks, but for Islamic banks, it will be an added advantage, because the ultimate objective of an Islamic bank is to see how the proceeds are utilized and how the financial intermediation process is done. This is one. Second example in this market, if you see real estate. So real estate has escrow, right? So Islamic banks provide escrow services. Now, how do we finance escrow accounts to developers in this market where you have limitations by the central bank from a regulatory perspective that not more than 50% of the property under construction can be financed? How do we bridge that? How this bridge financing can be done? So with this emergence of ecosystem where you have access to data, where the developers are sharing the data of who are the ultimate buyers of those underlying apartments. Can those buyers' payments or the payment checks that the buyers have given be securitized, be assigned in favor of the banks? So the ecosystem development with these two use cases or examples, I think will greatly benefit Islamic banks, Islamic banking system as a whole.
Well, the opportunity is obviously clearly there. That's something you both given us a look at. We also saw data right at the beginning of the morning from my colleague Chetan showing the growth in the local economy in the UAE and in the regional economy. It all sounds great, but, and I want a quick reality check, Darryl, if you would. Is there anything that we need to watch out for? Is there any challenge that could constrain the credit growth we've been seeing in the region?
Thank you, Robin, for...
I don't mean to put you in the position of being the one giving us the downer, but I have.
Yeah, you have. Well, thank you for the question. We do have challenges in this market. Specifically, being an overbanked market with around 52 banks and 7 to 8 financial institutions, including your neobanks. So we will have issues with granting credit to individuals, For the simple reason is that when you look at the GCC today or the Middle East, you have 12% of our adult population in the UAE which is not banked. You have 28% of individuals or adults in Saudi Arabia which do not have access to banking. And Qatar has 34% of their adult population who don't have access to banks. So you don't have any credit information on these individuals. The opportunity is significant because everyone's going behind the individuals who have a bank account, because that's when you have a credit bureau score. You know how this person is acting, you know how his finances are, you know how the individual, his capabilities to pay, and you even know that the central bank has regulations based on which you cannot over-leverage the customer. So the opportunity for us is to go behind the unbanked population across the region. And how do we go about that from an individual perspective? When you talk of 12% of the UAE population which is not banked, all these individuals based on UAE regulation have to have their salaries going through something called WPS. Now there is information and data available which is alternate data which clearly shows that the individual is receiving his or her salary every month. If you analyze that data and see how that individual is using that salary through the WPS system, you can determine an alternate credit score which then gives the individual an opportunity to borrow from you. So that's a significant opportunity. When you say 12% of the adult population, you're looking at least 1 million people which are available in today's day and age in the UAE which do not have a credit score, a credit bureau number which you can utilize. And using alternate data, you can actually lend to these individuals. From an SME perspective, I'd like to talk about a lot of SMEs and in the market today. Again, we don't have information on them, and it's getting close to, it's getting difficult, I would say, to lend to them because banks require collateral. Banks require some borrowing history, and banks require these SMEs to do transactions through a financial institution, unfortunately, and there's a large informal economy which runs with SMEs in this day and age in most parts of the world, including the UAE. This information is available, and if utilized appropriately, there are big opportunities for us to start lending to SMEs using this informal economy data, which will help us analyze. We create an alternate credit score, and we qualify these individuals to borrow. On the other hand, we need to customize products which are without collateral so that we can lend to SMEs in this market. So the opportunity is vast. It's only a question of how we see the opportunity and how we capitalize on it.
And it's all about the data, again.
Yes.
Which brings me to you, Bryan, and we were actually talking about this yesterday.
Yeah, sorry about that.
So you're going to
bend in your ear, mate. Yeah.
You're going to have to bend my ear about it all over again. How do we get to yes? As a financial institution, how do you get to say yes to more of these customers, these people who are, as you put it to me in private conversation, not even thin file, they're no file?
Okay, so assalamu alaikum and xin chào, so which is hello in Vietnamese. I've spent the last 4 years, a bald middle-aged Irish guy arrived in Hanoi with a suitcase and an idea that he wanted to address financial inclusion. Why? Because finances, guys, and it's important that If we do our job right, we improve people's lives and we improve our country. You'll see what Emirates Development Bank is doing here. You're seeing what a lot of banks do. So I think at times we're quite cold. And we shouldn't be, because we exist because of customers. So if you take, and I'll answer this in 3 parts because I've had 3 lives in the last 5 years. From building literally from 0 to now recognized as the best Gen Z digital bank and micro SME bank in Asia, recently by, quite proud of my team. My second has been what I do right now in the region, which is since April. I decided I was going to take a month off, but my wife decided that our marriage really couldn't tolerate me being there 24 hours of 365, so I said, fine, let's do a bit of risk mitigation here. I'll go back to all my Habibis for many years when I worked for National Bank of Abu Dhabi as head of solution design many years ago. And my third part is what I invest in and what I mentor. Okay. So when you look at, we have a problem as bankers, and we should recognize it, guys. It's all right, I'm a 30-year banker. I've done CRO, CEO, CIO, CTO. It's not the issue. The issue is we have a purpose. And when you see that purpose in the UAE, from where it came, when I first came, even to see it now, and the purpose is to find ways to provide the 3 component parts of banking, no matter where you're looking at. There are only 3 parts in banking. Doesn't matter if it's trade finance, it doesn't matter if it's retail, consumer, SME, it doesn't matter. There's 3 things. Payments, okay, so the ability to interchange money, a place to store your money, and many of our esteemed panelists earlier talked about trust, and of course, ability to give people credit so they can live better lives, develop better businesses, and that's really important. So when I went to Vietnam, very simple. There are 63 million people unbanked. Nobody spoke English. Nobody knew what VC was, and no one knew what digital banking was. But I developed, obviously launched their first digital bank, and now everyone's doing it, it's great. But I had to find a way, and if we stick on credit, I'm more than willing to share how we did the other parts. Because we acquired over 2 million customers. We built 2 banks in 9 months, built a marketplace, our own payments network, because we couldn't afford margin. But we also got to the point where we could lend. And people who are not, the invisibles, they're not bad people. You only have to go back 30 years here, and I'd love to know how many people had a bank account in the UAE. But if you look in Vietnam, there's 63 million of them, and 33 million of them were students. So I had to find a way. Now, I didn't start, I know about Gini, I know if you use alternate data, you can increase Gini by 40%. It wasn't about that. And I tell everyone, really, and I get worried at these conferences sometimes because we don't mention customer a lot. My first hire was a psychologist. My second hire was a sociologist. And my funder came to me and he said, have you gone stark raving mad? You need this mental help. Because, it's pretty direct in Asian culture, particularly in Southeast Asia. I said, no, I need to find out how I can lend to these customers safely. I'm a data scientist. I have done all of the parts of that. I knew I needed data. But I needed to get to the real need. And the real need isn't found in, I want a loan. Nobody in the history of mankind has said, I want a loan, full stop. I want a loan to build my business. I want a loan to educate my children. I want a loan. And we built a whole lending proposition around that second part of the sentence. So what we did is we built an ecosystem. And guys, I get confused at these conferences. Let me explain to you. Ecosystem has been around since we crawled out of the slime X million years ago. It's about giving a person or a species everything they need to live their lives and prosper. It's not a selection of products. So when you're talking to your customers, 1 hour with your customers is worth $1 million with BCG, McKinsey, or whomever. When you actually talk to your customers, you find out what they need the money for. So what we did was we started to build up data. These are people who didn't need banking. They were living very happily in Hanoi and Ho Chi Minh, wherever. But we had to find a way that made banking relevant to their lives. Okay. So if we look at the total digital lending market right now, it's quite interesting. It's probably going to hit $1 trillion by 2030. estimate lies in damn lies in statistics, but indicatively 405 billion in the world right now. And if we look at what's happening with the lending companies, or the lending apps, that's making up this year maybe 12 billion, estimated to go to 40 billion. Why do they exist? Because the traditional banks can't serve, because their cost to serve micro merchants. So my cost to serve, which, guys, is a statistic I would tell you all of you should live by, which is how much does it cost you to serve one customer for a year, X marketing? Okay, in a bank that's hundreds and hundreds of euros. In a digital bank, if you look at Nubank, for example, my dear friends there, most successful digital bank in the world, revolutionizing finance in South America, that's about $5 a month. I couldn't do $5 a month because my customers earn $2,500 a year, and I'm not a Harry Potter digital banker where I believe grow and Expelliarmus, I'll make profit. I had to make profit. So I couldn't pay $5 a year. So I had to run my whole bank. Assets, liabilities, marketing, BD, compliance, geo-consolidation, legal, cost of compliance, and we ran it for $5 a year for nearly 2 million customers. But when I looked at lending, I had to find a way of doing that and keeping that cost. So these loan providers, okay, these fintechs, or whatever you want to call them, I was in the Valley when it all started off. I think it was a fintech. They only named it a few years ago. These fintechs can do it at a price point, because we have to be sustainable, because of massive deployment of cloud, massive deployment of data science, but more appropriately, they don't have ego. They are not on NIM drugs. Banks are addicted to net interest margin. The problem, guys, if you remain solely focused on net interest margin, you're going to be disintermediated, because banking is becoming invisible. BNPL, risky business, we say. I know that, but it's here. Revenue-based finance, etc. Now I'll move to the second part. Sorry, Robin, and you can shut me up, but I'm Irish and we have a tendency not to shut up a lot. Actually, somebody
Bryan,
called me Egyptian.
When you stop being entertaining, I will shut you up.
Thank you very much, my friend. He is one of the best moderators I've ever been. I've been around a while, as you can tell by my hairline. Okay. Now the second part is I'm working in the GCC. Why? As I drove into Abu Dhabi the other day, I feel at home here. And I think my experience is what I did, I can help here. So we're doing a lot of advisory. And most of the advisory I'm doing is around how do we become more relevant in our customers' lives. Remember, the ecosystem is the customer's needs or the business needs, not your selection of platforms. How do I align to that? And primarily, we're doing a lot of work there. And fast forward, in my personal life, I'm chairman of some alternate lenders, and I've invested both in India and in the UK in lending. And SME is a problem, guys, not just consumer. So if you look at what's happening on the interest rate macros right now, and if you look at working capital loans, because that's what you worry about when you're an SME at the end of the day, okay? How do I pay the bills, okay, in a shop, or how do I pay the bills in a small company? We're seeing a dramatic problem in Europe, and I'm speaking at a government thing about it, of all places, Moldova in the next few weeks, where our SME lenders, our SME customers, have to use credit cards to finance working capital. So what we're looking at now is a huge emergence of something quite exciting, which is revenue-based finance. So you're seeing the likes of Silver, Aiden, Stripe, all those payments guys who have already in the minds and business flows. And what they're doing is they're allowing customers to almost have an OD on steroids, yeah? So they can borrow in short cycles in an unsecured basis, because what you're looking at is data. You're looking at that this shop has always sold X amount January, February, March. Then you take a lien, or you take ownership of that POS account, for example, and then your PDs become your probability of default, or your Gini, okay, on the other side, starts to go higher. So I really, really wish Robin would stop me, because I could talk about digital for months, guys, because that's been my life since probably about 25 years now. So I'll shut up, Robin.
Well done. I was just about to stop you. Expelliarmus.
Thanks. More. What are you?
Yes. Let's put some technology behind what Bryan's been telling us. Darryl, again, if I could start with you on this. What's the tech that needs to be put in place to make this work, to make these decisions possible? What do we need to look at? We need to look at artificial intelligence, we need to look at machine learning. How does this actually work in reality?
So, ML and AI are the inwords for quite some time now, but today it's becoming part of everyone's vocabulary. And the importance of it is that we need to make sure that we are not being biased while using artificial intelligence and machine learning. And how do we not be biased in using this information? The most important aspect we need to look at is to ensure that the data points that we are picking up, especially for the unbanked individuals, the alternate data that we pick up, is from a diverse population, so that there are no situations where we are excluding some individuals or some groups or some ethnic background, some age group, some say different religions. And how we go about doing that is we need to have this information audited and checked. So whoever is running our MI and artificial intelligence and machine learning need to document all the analysis they are doing in such a manner that it's understandable to the end user, and it can be audited by external auditors and even our internal individuals. Once we make sure that we do that, we can be lending and in a non-biased manner. And today, like when you look at ChatGPT, what's happening on ChatGPT, you ask for certain information and it gives you an answer. 10 minutes later, you change one word in that question and it gives you another answer. And a day later, you change 2 words and it gives you a third answer. So what is it doing actually? It's picking up information that's available and it's just throwing it out to you. However, there are times when you actually get an answer which is nonsense, absolute nonsense. It's totally not answering your question and it's not giving you the right information. So we need to be very conscious when we are using machine learning and artificial intelligence in taking credit decisions. Because if we do not look at it and scrutinize it in an appropriate manner, we could go wrong in lending. And especially if we want to lend by using alternate data, we need to be very cautious because a lot of people would like to shoot you down when you go wrong and your NPLs go up. That's the situation.
I would go slightly further because I'm not employed by a bank. And I would say the data has to be questionable. And when I say questionable, I'm not casting any aspersions upon it, but you have to be able to challenge it. You have to be able to challenge it, it has to be transparent, you have to be able to explain it. How did you arrive at that decision, whether it was a yes or a no for lending? Can you justify that decision? And if that decision is no and the customer challenges it, can you explain to the customer why they got turned down? If the decision is yes, whoopee, I've got the money, thank you very much, and I probably wouldn't have got it if you hadn't used that extra data. Which brings me back. Don't Don't look so scared. How do you, as an Islamic bank or as Islamic financial institution, plug that alternate data into your decision making?
So, I think when we talk of reimagination, in the past, I mean, Bryan says he's been in UAE for 25 years, so we see a few years back, people in UAE would carry 12, 13, 15 credit cards with unlimited limits, right? And what that has resulted in is basically, suffering for the common people. And similar things happened with SMEs, other businesses. Why did that happen? Because ultimately, lending was being done without proper, let's say, data points or due diligence. In Islamic banking and finance, there are some inherent protections. In a sense, let's say, if an Islamic bank were to finance, they would see availability of an asset, so you would not have clean lending in that sense. Or if it is for a customer for far too long, you would not have an Islamic bank doing cash financing. It started off late. So with these reimagining the ecosystem, I think the key point where we see convergence between Islamic banking and sustainability, not just for the environment, but for the human beings as well, is how are you actually benefiting the society in terms of, fulfilling their needs, not dumping them with something which they may not require. So that is, I think, with the alternate data, let's say if we imagine personal finance. Now, Central Bank of UAE has also imposed some conditions on banks where you need to check affordability, where they are asking questions around how much are you paying in rents, Till now, there is no integration in terms of verifying that for banks. These data points, someone can game them. However, if we have an ecosystem where the banks have access to these data points in real time, that this is their income and these are their expenses fed in from Diva, from Itisalat, from other sources in real time. Probably that personal finance decision or that credit card decision or that car finance decision or how much credit they can access will be more human sustainable. So I think that could be one of the aspects that we can reimagine with the alternate data that could be made available to the banks.
And we started off talking about DP World. Let's end on DP World. Can you plug in the kind of data Ammar's just been talking about into the decision-making process that DP World Financial Services will go through when it comes to things like trade finance?
The short answer, Robin, is yes, and we have already started doing that. But the larger answer is there's certainly a pressing need to actually use alternative methods to assess credit. It is clear that the traditional banking ecosystem has failed the SME sector simply because they access to 10% of the funding while representing 50% of the trade. It's clear that it's failed the international trade, looking at a $1.7 trillion trade finance gap. So it just doesn't work today. We can like it or dislike it. It is a situation. So what are those alternative methods? One is certainly the trade data. So we already started collecting the trade data and plugged in our credit model. In our credit model, as in we are not just a platform, we are also a lender on our platform because we also obtained lending license and already financed over $250 million trade in just 10 months. And already reached the capacity to finance $1 billion trade a year. And aim to continue growing that. One is collecting the trade data that we are in. Number two is the transparency and information asymmetry. So it's not just the credit risk per se, but it's also compliance risk today because compliance is something living. Every day there's a new thing, right? So it's just having the visible to an underlying trade. Because I'm an ex-banker too. We relied on paper for years. If the paper is forged and you miss it, done, you're good. Is looking at the underlying trade is key. Number 3 is actually collateralizing that trade. So what we have done today is we created an electronic house bill of lading wherein we are able to pick up a cargo from point A to point B. I'll give you one example that we have done. It was even not our direct lending. One of our lenders on the platform drove comfort with it. We picked up a cargo in a place called Panipad in our inland container depot in north of India. Put it on our rail, train, brought to a port called Nawasheva, which is also DP World Port. Put it on our ship, which is Unifeeder shipping line, brought to Jebel Ali Port, DP World Port, and delivered to a warehouse in Jafsa, Jebel Ali Free Zone. And before that, the buyer paid the money to the lender on the platform and then released the cargo. So this is just an example and relying on just actual underlying trade. No. And we were able to collect the data, control the trade, and eventually the lenders on the platform already drove comfort. Now we are also lending ourselves too.
Okay. Very, very quickly, Bryan.
One point, because
can you use a microphone?
Just one point. Alternate data is good business, okay? We're all afraid. We're all stuck in the 1950s with one data element, which is your credit score. So we know, and I've proven it, that you can increase your Gini by 40%. 40%, guys. Your default rate's going to go down. And to finish up, we took in 637 data points, and if anyone wants to know where we got them, plus the credit score. And what we did then is, because I like to stress my data science people, I ran an A/B model. And I did traditional, and we followed it all the way to collections, okay, and alternate. Alternate was 30 to 35% more effective of me getting my money back. So lending money is easy, it's hard to get it back. Last point, guys, there's 6 C's in lending, it's never changed. And the one that alternate data allows you to address, when I did my Bankers Federation exam, when I had more here, less here in 1992, was character. And if you judge the character, you'll get your money back higher, because character reflects capacity.
And on that note, is anybody got any questions in the audience? Gentleman there.
Thanks. This is Mohammed Wasim from MBank. I'd like to ask Bryan on the alternative data. So you are a consultant and you have really achieved the big data science in terms of having 600 plus data points to have proper credit scoring. Are you prepared to give your services to a bank where you are tied up with a particular default ratio that could be part of your compensation?
Okay, so you're talking risk share models?
Yes.
Of course. All right. I'm working with a fintech that I've just given some of my family inheritance to, and the wife doesn't know yet, but called an investment, inshallah. All right. The lending companies right now are in serious trouble because the cost of funds has gone through the roof. Okay. So they have to move away from just a fee basis model. Okay. So they have to get into risk shares. Okay. So capital is key. So how do I run a fintech or a bank? I've been on both sides and work on both sides at the moment, a bit of Jekyll and Hyde, unfortunately, but I enjoy it. Lenders should agree a risk share. Because in reality, what that does for the bank's tier 1 capital, and also for the culture, because banks' culture is the issue. They don't want to take the risk. They don't have to take the risks, okay? Because they can still make the money off NIM, traditional NIM. So lenders and banks should talk about risk share. Because what I'm saying to a bank or an investor, marketplace or a direct investor is, I'll take 60% of the profit, but I'll take 60% of the risk. Okay? Well, what that's saying is, I believe in my data model. Okay? So you're actually selling your model. And guys, it all comes down to Gini. We can talk digital at the end of the day. As you know, Gini is between 0 and 1. 0 is what people I dealt with for 4 years of my life with no file. And one is you're pretty much guaranteed to get your back. You never get to that one. And this, we know that you can push this Gini up by 40% just from, from traditional mechanisms. Now, banks know this. And if you remember the numbers I said before, that it's going to reach 1 trillion. And I think banks are learning this, They've learned it. They've failed and learned, okay? You'll start seeing banks more and more understanding that payments has changed, deposits have changed, now it's lending time change. Let's not be stuck in 1950, which is a credit rating, because it is not a true reflection of a business, and it's not a true reflection of an individual. It's a part reflection. And as you've more data, you can be more ethical, you can be more profitable, you can engender loyalty. Also, last point, I actually signed a deal with, well, about to sign a deal, I have to tell the wife about this, but I'm going to do a deal on acquisition as well. Because with data, in business, guys, cost of acquisition kills business, okay? Because if you spend 100 dirhams getting a customer, you have to earn at least 133 dirhams to make a profit in customer lifetime value, okay? So what I'm saying to the lender is, you don't worry about cost of acquisition. You just sit there with the capital, and I'll take 60% of the risk, and I'll bring you customers for free. And that starts getting, so acquisition risk and default risk. You're totally right, that's where the market's going. By the way, you need bips on the balance sheet if you're going to survive in credit as a fintech. You have to get an agreement of bips off the balance sheet. The only way you get that is by risk share and agreed PD or agreed levels of PD. Yeah.
Thank you.
Hopefully that answered it.
One more question, if there is, and if there isn't, yes, gentleman there.
Hi, good afternoon. So I just want to know, when we are talking about alternate data sources for credit ecosystem, are we also looking at capturing some data for better collection? Because I believe collection tech is, lending is tough, collecting is tougher. So, wanted to get point of view from the leaders here.
Oh yeah, you are very, very, very correct, sir. But remember, we grew up in the 30-day, 60-day, 90-day buckets. We all know those buckets. It rhymes with something in English, but I'm a very polite man, so I won't say what that is. You can't, in a world that's continually moving, that's stopped data. So what we did in TNEX and what I'm doing with a revenue-based financer in the UK for SME business, is we create risk radar, okay? And we try and step in before it gets to collections. Now in Vietnam, it's an ethical thing for me, guys. My ethics and my values, I can't look at my children if I ever break them, and my ethics and values are very key to me. In Vietnam, collections are not like the modern world. They'll go after, and those of you from many years ago in India will know this as well, I have a lot of my career there. They'll kick the door down, they'll go after your brother, they'll go up. So I never wanted to get there for default, because we as bankers have a responsibility to people to make their lives better. Don't lend money, another one of the C's, as you talked about, capacity to repay. So what we did is, in real time, okay, I could run the bank from my phone. In real time, we started to see when people were trending in the wrong direction. And we went and tried to help them. Okay? And what actually you found was, because you were engaging in a way that was constructive, they worked with you rather than there's only 24 names in Vietnam, okay? It's very hard to find anybody. There's no addresses, and there's lots of jungle. And white guys don't do well in jungles, so I wasn't going to go chasing through the jungle looking for my debtors. But I never wanted that to happen. So risk radar, I think we now have, you're totally right, but on acquisition and collections, if we leave it till it gets into the bucket, then what are you going to do? You'll see what happens, particularly on small ticket loans. You'll sell it. You'll sell the debt. And what are you doing then? You're moving away from your responsibility to be careful with your customers, to have due care. Because these collection companies don't care. It's brand damaging, but it's also not ethical. And we see that a lot of what we're seeing in the past from Islamic finance, we can learn, okay? We can learn, because there is a big difference between lending and usury, okay? A very big difference. Hopefully that answers, but yes, Yeah, I've been there.
And with that bulletin from the heart of darkness, that was Joseph Conrad, not Harry Potter. Heavens, I don't know. Ladies and gentlemen, thank you very much for your attention. If you would like to reward our panel.